Morning, ladies and gentlemen. A very warm welcome to all of you to CII Conference on Financial Governance, Building Trust 2025. Please join me in inviting our chief guest for the conference, Mr. Anant Narayan ji, whole-time member, the Securities and Exchange Board of India. We have with us today C.A. Charanjot Singh Nanda, President, the Institute of Chartered Accountants of India. Please allow me to welcome Mr. N. Venkatram, Chairman, CII National Committee on Financial Reporting and Country Chair, CDPQ India. I would like to welcome on stage Mr. Mark Billington, Managing Director International, the Institute of Chartered Accountants in England and Wales. We have with us today Mr. Manish Chaudhary, Partner and Financial Services, Industry Leader, Deloitte. I would like to call upon Shobit to please take the session forward.
Good morning, ladies and gentlemen. On behalf of CII, I would like to welcome you all to the 5th edition of CII National Conference on Financial Governance, Building Trust. It's a pleasure to see such a huge gathering of business luminaries and finance professionals who play a crucial role in shaping long-term business value for stakeholders. Restriction on capital flows, changes in technology, sustainability, geopolitical upheavals, are pressing challenges of our time. Business communities are aligning themselves to the realities of global tariffs and trade wars. Financial communities need to embrace the changes and respond in line with the global development. This conference is being organized to portray the work of CII in corporate reporting domain and to provide a robust dialogue platform to industry. CII is working to pull together the stakeholders and work on consensus building for laying the foundation of what is required for the future and enhance competitiveness of Indian industry. CII would like to sincerely thank and welcome conference chief guest, Mr. Anant Narayan ji, whole-time member SEBI, for sparing his time and gracing the conference by his august presence. Mr. Narayan needs no introduction. Mr. Narayan has been a vibrant force in shaping and strengthening India's capital market and is looking after Market Regulations Department, AIF and FPI Investors Department, Enforcement, Inquiries and Adjudication Department, etc., to name a few. Sir, in today's session, we look forward to be guided by your vision. We have with us Mr. N. Venkatram, Chairman, CII National Committee on Financial Reporting. Under Mr. Venkatram leadership and guidance, CII National Committee on Financial Reporting has closely worked with industry and government for creating an enabling business environment for Indian Inc. We have with us C.A. Charanjot Singh Nandaji, President, Institute of Chartered Accountants of India. Nandaji needs no introduction. Mr. Nanda has been serving as 73rd President of ICI of India for the time 25-26 and has kindly agreed to be guest of honor for today's session. Mr. Mark Billington, Managing Director, Institute of Chartered Accountants in England and Wales. Mark is based in Dubai and have previously been the Regional Director, Greater China and Southeast Asia, based in Singapore. He is responsible for leading ICAW activities outside UK to support members, manage stakeholders' engagement, and develop ICAW's international capacity building. Mark has over 30 years of experience in evaluating and managing large complex deals and organizations, and is a frequent speaker and commentator for ICAW. Ms. Helen Brand, Chief Executive, Association of Chartered Certified Accountants. Ms. Brand will be joining in virtual mode. And Mr. Manish Chaudhary, Partner in Financial Services, Industry Leader, Deloitte Tomato India LLP. With these words, I would like to welcome and thank you all once again for being part of this important conference. May I now invite and request Mr. Venkatram to start with his introductory remark. Thank you.
Good morning, Mr. Anantnarayan, Mr. Nanda, Mr. Billington, Manish. Thank you for being with us today. It's really fascinating as to the way in which this annual conference has panned out, because I recall when we started it a few years ago, not in the very distant past, it was just about 20, 25 of us sitting across each other and I don't want to say shooting the breeze, but certainly deliberating on what we thought were the vexing matters on governance and financial reporting that we needed to speak about. And I must congratulate CII for building it out today. And one of the big achievements that Shobhit has done as a result is he's got me to write down a speech, which I don't normally do, because I said when there's so many people, I can't be rambling. I've got to really keep some sort of form in what I do. So I just thought that if I looked at the way the panels were structured, a good way to give my introductory remarks would be to say why were these panels chosen and what are the outcomes we seek from all of you here in this room. Because I am sure that the panels will afford us enough time for the questions and answers as well. So therefore the topic in a sense is the future of financial governance. So we did talk about it in the past, the question of trust, but today I would think that financial governance is really undergoing a sort of a tectonic shift. Yesterday in another conference, somebody was talking about the three T's, which is Trump, tariffs, and turbulence in the markets. But I will limit myself to the tectonic shifts due to evolving risks, the governance challenges that would happen in any emerging market, and indeed even in developed markets. The future of ESG, given all that's happening across the world, and of course, the continuing regulatory reforms we need as we work towards a $10 trillion economy. So the geopolitical landscape, the declining trust in institutions, and I normally refer to the Edelman barometer for that, underscore that we do continue to need transparency and accountability in whatever we do. And in this, the leverage that we have today is what we worry the most about, which is the technological advancements. Unfortunately, I come from another age where I've even seen, for example, when the public sector banks had to implement technology in the old days, that all the staff used to go on strike saying this is a terrible disruption, and especially in the eastern region, which I visited a lot in Calcutta and the like, I mean, a daily strike was like the norm of the day. Today, people don't strike about it, but we certainly do worry a lot about it and perhaps tweet a lot about it as well. But this is reshaping the reporting system as well, and we have to see how we can turn that to an opportunity and advantage for us. And I think the underlying question is how do we retain our credibility and how do we ensure compliance? So let me just touch on a couple of topics and then build it all together. The first is geopolitical risk. And I think since the whole question is what do investors want, for example, in our first session, I would say, and market volatility. So the global instability, which all of us are reading about, probably thrown at us by TV every day, occasionally embellished by things that happen to, like the gentleman from Ukraine, tell us that a lot of this is driven by conflict, increasingly will be driven by trade retaliation and wars, by economic sanctions, regulatory actions, and the like. A major area where this hits us is foreign exchange and the volatility that requires an accurate disclosure of currency risk, but also in terms of how you do your valuations. And for those of us who are investors, the question about how do you look in terms of long-term patient investing and getting a return with some sort of stability when currencies are so volatile. The second is, of course, and I must pause for a moment to say today is actually the day on which COVID was first announced as a pandemic. And so therefore, I think that it was COVID that actually, in a sense, gave us the first exposure to supply chain disruption. But now we find that supply chain disruptions will also be impacted by what's happening with tariffs and everything else around it. But from a financial perspective, it's also a question of how do we do better cost analysis? How do we do our revenue forecasting? How do we ensure that there's an ethical element of supply chains that we don't miss out on as time progresses and our pressures increase? And the third, of course, is something that the US introduced, which was sanctions and compliance to those sanctions as well, where you had countries which were sanctioned, such as Russia. And therefore, how do you, as say an international company, ensure that you comply with the requirements of those sanctions, because they have dire consequences if you don't? The second area would be around the economic risks and the inflationary pressures, because one side of it is currency, and of course there is also the interlinkage with what happens when economies suffer inflation. But certainly there will be the concern of rising inflation across. And interestingly, the rising inflation, while we may like to blame it on supply chains, tariffs, and everything else, would also be caused by climate change. So therefore, when we look at the future and say, how do I look at valuations, or how do I look in terms of my financial projections? Because a lot of valuations are based on forecasts 5 to 10 years out. I think there is a huge impact that we need to expect on asset valuations, debt structures, cost projections, and the like. It will also impact central bank policies and interest rate fluctuations, corporate borrowing costs, financial risk disclosures, the ability of banks to lend. And as you know, in an economy like us, every trillion that you want to add to GDP, I'm not an economist, but my forecast is you need at least 3.5 trillion. Sorry, for every trillion you add to GDP, you need at least 3.5 trillion of capital formation. And that 3.5 trillion of capital formation, even if I simplistically say this 50% debt and 50% equity, it's a lot of money and it's a lot of pressure. So therefore, when you look at it from that aspect to say we have to get to 10 trillion, it's a huge, a humongous amount of capital formation that needs to take place. And having to do that at a time when you also look at inflation, when you look in terms of stability of interest rates, when you have to look at stability of foreign currency, is a big ask. So liquidity, solvency, etc. also become big issues that need to be addressed in financial statements. And then, of course, we have governance challenges and regulatory concerns. Whenever you have growth, you always have growth pangs or growth pain. And I think we are in that state, whether it's as an economy or whether it's as businesses, that we are having relentless growth across sectors. And with that, it also brings what are the checks and balances we need to have as we grow. And for that, I bring the second T, which is trust. You know, trust is a word which was increasingly becoming important even at places like Davos. And in fact, the Edelman Trust Barometer used to be the index that they used at Davos for a long period of time. But I think there's another T who has sort of diminished. So it's a big T versus the small t. I think a lot of trust in the world is actually going down these days. And it's important for us to emphasize what trust would mean to us. The interesting thing, again, to bring it back to COVID, is the Edelman Trust Barometer actually said that trust in business corporates, was the highest post-COVID, because that was the period when companies were perceived to be most competent and ethical. It's a little ironic that it happened only with a pandemic, because the Edelman Barometer actually looked across, they looked at NGOs, they looked at government, they looked at business. And the interesting thing was there was a point in time when NGOs were actually the most trusted. That failed. Then there was a point in time when governments were looked at the most trusted. That failed. And then by default, it came back to say, how do we maintain it in business? Now, the interesting thing over here, therefore, is that trust is dynamic. There is nothing called permanent trust. It's not that I trust you forever or that you trust a company forever. And therefore, it's so important that we have to see how we react or we respond to the global events, the economic conditions and societal shifts as we try to continue to build on this trust. And so therefore, in a sense, I would say that when we talk governance, it is synonymous with trust. We have to also look at how we build trust. And, you know, like we talk about Dharma, the bull standing on 4 legs. And in this generation, it is only the leg of truth that prevails. I would say if I look at the bull in front of the stock exchange, the leg on which it stands today should be trust. So this is the important leg of the bull that we have to look at. This trust has great amount of importance on corporate governance and across time, and you will see what regulators have also been looking at more is you have to look at how you look at related party transactions, executive compensation, board representations, and the like. And this is the period when you will find that regulators will have to increasingly be more proactive with corporates, but keep shaping the future. It is going to remain dynamic. It's not that we can ever say at a point in time we are under-regulated or over-regulated. There will be continuing regulation. And in forums like this, through our panels and through our discussions, CII would also seek to get feedback that they can then take back when we finally do our papers to SEBI and other regulators as well. I know I'm going a little slow, I hope. It's one of the strange places where I don't see a clock which tells me whether I'm beyond time, but I hate to be the first speaker and then delay the whole process. So I'll just maybe go a little faster. The other part was ESG disclosures. And here I think that, again, climate change, if you look at ESG and you look at climate risk and carbon footprint, why it becomes important, again, I would say, for investors, is finally climate change also impacts, say, for example, food production. It would impact inflation. It does impact currency. So don't look at climate or only impacting your lives. Even in financial terms, it impacts you much more than you can imagine. So I think regardless of whether the rest of the world abandons climate or not, for a growing economy like ours, we have to continue our emphasis on all parts of ESG and in particular climate. I think the social governance metrics, labor, diversity practices, ethical sourcing, these should also be continued by corporates. And finally, I think that this is a once-in-a-lifetime opportunity we have when countries like the US are de-emphasizing what they do around regulation on ESG, that we should look in terms of how we set climate standards, because eventually climate standards will also impact what you do around carbon tax, etc. We are looking in terms of becoming an export-driven economy as well. And it's important at this point in time if our regulators, including the ICAI and the like, would also be looking more in terms of what we do around sustainability reporting. Because I think SEBI has made the start, and if we are able to even get some way of capturing the value of climate, it is something that will help us when we look at taxation in the future. So with that, I would just finally close with saying technology will also be important on that. And there, largely, it will be both artificial intelligence, etc., as well as cyber security, data privacy and the like. I think I've run out of time, so I won't speak too much about it. But I think embrace the technology as it comes. India is a country that generates technology for the world, and we should look at it as our advantage. And therefore, the more we can embed technology into what we do as we try to achieve these goals, we will finally get a stronger sense of how India can progress. So to just close, I would say that the future of financial governance is being framed by the risk dynamics, ESG considerations, corporate governance and reforms, and technological breakthroughs. And with the increasing geopolitical uncertainty, the relative risk of decline in institutional trust, companies have to prioritize ethical governance and transparent reporting. We look to all of you sitting in this room to participate in our deliberations and help us to do that. Thank you very much. I may apologize for giving a pretty serious speech today. I don't normally do, but this is all out of respect for Mr. Anand Narayan.
Many thanks, sir, for your insightful comment on future of financial governance. Sir, may I now invite Mr. Mark Billington for his inaugural remarks. Mark.
Chairman Venkat, President Nanda, fellow panelists, ladies, gentlemen, good morning. It's a great honour to be here today at the 5th CII Conference of Financial Governance, Building Trust. I spoke at the 4th conference and I'm delighted to be reconnecting with many of you 1 year on. The theme of the conference this year is Building Trust, and it's very relevant to business and indeed the world in 2025. Because in the current dynamic environment, it's becoming more difficult to assess who and what to trust. In that environment, good governance becomes more important, and therefore the two themes of governance and trust are appropriate for today's conversation. I should start by providing some background about my organisation, as it'd be wrong for me to assume that everyone is familiar with the Institute of Chartered Accountants in England and Wales, which I lead internationally. And our work here in India is also important to us. Indeed, as for why chartered accountants are relevant to today's wider business conversations, ICAW is the oldest professional body for accountants in the world. Founded in 1880, there are over 200,000 members and students of our institute who work, contrary to what is suggested by our name, all over the world, including India. Our prominent members in India include Yezdi Malagam, Deepak Parekh, Keki Dideseth, and Ishat Hussain, all well known in industry. Indeed, Dr. T.V. Samanathan, Cabinet Secretary, is also one of our members. As in India, our members are central to the world's economy. 99 of the world's top 100 companies employ an ICAW chartered accountant. We're a founding member of Chartered Accountants Worldwide, which involves 1.8 million accountants in 190 countries. We regulate and supervise thousands of companies globally, ensuring that they reach and maintain the highest standards of financial management and reporting. So it's no exaggeration to say that our members ensure the smooth running of the world's capital markets. Two of my colleagues are joining me at the conference today and will be speaking in the panel sessions. John Bolton, Policy Director, who has travelled from London, and Vandana Saxonaporia, who is ICAW's Strategic Advisor for India. I'm especially delighted to be here today as I recognise the ever-growing importance of India to the world economy. India is at the heart of an extraordinary business revolution. Today it ranks as the world's 5th largest economy, accelerating towards a 4 trillion GDP, and 3rd globally in purchasing power parity. What's truly remarkable is India's unprecedented achievement in digital financial inclusion. It brought financial access to 80% of its vast population in just 6 years, a feat originally expected to take almost 45 years. The nation boasts the 3rd largest startup ecosystem worldwide, with over 270 billionaires driving innovation across sectors. Global giants like Apple now manufacture their flagship devices here, reflecting India's growing importance as a strategic manufacturing hub. India is also rapidly becoming an AI powerhouse. With an army of nearly 5 million programmers, its artificial intelligence market alone is set to reach $17 billion by 2027. And if that's not enough to surprise you, consider this. French luxury brands are now turning their attention from Paris to Pune, viewing India as today's version of China from 2 decades ago. Clearly, India isn't just rising, it's already rewriting the global business narrative. Now, with geopolitical uncertainty in the global north, India's growth comes with opportunity to bring a greater voice for the global south. But navigating this uncertain environment is challenging for business, who must balance these forces, the 3 forces of uncertainty and political direction internationally, a more robust approach to regulation, and the dynamic opportunities for business growth, particularly with AI. Many certainties of the old business world can no longer be counted on. So how can we deal with that? How do we stay on top and win as business leaders? Well, let me start with my first point of ethics. Ethics and trust remain paramount to investment. Corporate reporting cannot be a compliance exercise. Ethical leadership is vital. It must be done with care, competence, an objective mindset, and high standards of integrity. That is the foundation that trust is built upon. Secondly, in uncertain times, not to forget long-term sustainability is so important. Sustainability and sustainable finance is a business imperative, not a compliance burden. Sustainability imperatives will vary by business and region, but recognizing the business reality and showing the benefits of sustainability is crucial. And thirdly, success will be enhanced by the creation of supportive, not punitive regulation. Effective regulation balances accountability with innovation. Clear guidelines and ongoing education help businesses thrive in a supportive framework. If regulation is too punitive, it will stifle innovation and cause organizations to adopt a risk management approach. They will be cautious to the detriment of opportunity and growth. So with those in mind, I want to tell you more about what my organization, ICAW, is already doing in India to bring about these three elements. We're supporting international interconnection. We have been actively building influential partnerships in India, closely collaborating with CII as network partners here for the B20, an initiative, by the way, that we are now extending to South Africa this year. Our relationship with ICAI, our fellow members in Chartered Accountants Worldwide, continues to flourish, notably through participation in GLOPAC, our President's recent address at the ICAI conference of WAFA, and even earlier through joint initiatives such as our forward-looking research report, Finance and Automation, developed well before AI became mainstream. We remain deeply engaged with leading Indian industries and organizations, including the Tata Group, the Global Capability Centers here, and the Big Five professional service firms, addressing critical business issues and sharing valuable resources to foster collective growth and innovation. I also want to turn now to consider how the current international environment and what it means for the three themes that I've set out of ethical leadership, sustainability, and the regulatory environment is playing out. So we'll all be aware that trends on these issues ebb and flow, none more so than in the current international environment, where the political and regulatory winds of change are moving, and moving fast. This has implications for all of us, if only because it has the potential to define market expectations and norms. We have all seen the Trump administration's moves around diversity and inclusion. That retrenchment will likely be extended to sustainability and sustainable finances as the country prioritizes domestic growth over everything else. Now, how other countries react to this will be interesting to watch and consider. Some will follow in suit. Others will see competitive advantage, for example, in going still further on delivering a sustainable agenda. Many will see responsible business as the cornerstone both of long-term growth and prosperity across society. My instinct, as I said at the start, is that sustainability is a business imperative and a commercial opportunity. For me and our institute, the role of sustainability and responsible business has a longer tenure than a changing political wind. In addition to sustainability, I wanted to take this opportunity to update on other policy issues from an international perspective, given their global impact and relevance to today's discussions. On climate-related disclosures, the SEC has delayed the implementation of climate disclosure rules, pending judicial review. Nominee Paul Atkins is expected to halt progress on ESG reporting despite state-level initiatives like California's climate statutes. On the current trajectory, many US companies will need to comply with the EU CSRD reporting, and it will be interesting to see how the US companies approach this issue. The EU itself is making what they term burden reduction measures to ease adoption of CSRD, and we await the revision of the European Sustainability Reporting Standards. For corporate risk disclosures, the SEC's 2023 rule on cybersecurity risk management has faced criticism for overstepping its remit. The first round of disclosures showed inconsistencies, particularly in the approach to materiality, but this is expected to improve over time. In general, we can expect there to be scrutiny of the SEC's remit and how recent standard setting and enforcement activity may have extended that. At the Public Company Accounting Oversight Board, or PCAOB, nominee Paul Atkins advocates for a pared-down regulatory approach and for the PCAOB to reevaluate its independence and budget. A refocused PCAOB might better use data to target risk areas while improving transparency and reducing compliance burdens. But ongoing investment in audit quality will be essential. So why does this all matter? Well, as an international accountancy body, ICAEW recognises the profound impact of US and EU policy on the global financial ecosystem. Sharing our knowledge and expertise of those shifting sands enables all finance practitioners around the globe to better understand the changing environment and act accordingly. By staying informed and being proactive, we can better support businesses and institutions around the world, including India. So in conclusion, towards the start of this speech, I mentioned my three key messages for today. These were: ethical leadership is paramount, sustainability is a business imperative and must not be seen as a compliance burden, and regulation must be supportive, not punitive. To close, if you take away just one message from what I appreciate has been a packed speech, please know that ICAEW is committed to supporting the CII's vision of playing a catalytic role in linking CII with multiple stakeholders across the globe and projecting Indian industry as a stable and dependable partner. By leveraging our global network, expertise and resources, we can help build capacity, drive sustainability and foster regional collaboration. Together, we can ensure that India's capital markets are well equipped to meet the challenges and opportunities of the future. Thank you. I hope you enjoy the rest of the conference. I look forward to our collaboration.
Thank you, Mark. Now we'll play the video message from Miss Helen Brandt.
Good morning. I'm so pleased to share my warmest greetings and good wishes on this splendid and important occasion. I want to extend a heartfelt welcome to all our guests, speakers and participants joining us today. Your presence highlights the significance of the topic we're discussing, and I'm grateful for the opportunity to share my thoughts. ACCA is so proud to partner with this vital national conference on financial governance. And I'd like to thank all our friends and colleagues at the Confederation of Indian Industry for the incredible dedication and energy you have thrown into staging this event. The conference theme could not be more appropriate, relevant or timely: financial governance, building trust. It goes to the heart of what we all seek to achieve as business leaders, policymakers and as professional accountants. Financial governance may sound like a dry, boring, irrelevant concept to outsiders. It's not. It couldn't be more critical. In essence, it's about how we use our influence and expertise to grow the businesses and economy that will fuel sustainable growth, prosperity and security for all our people, whoever and wherever they are. And we have seen that the definition and the reality of what responsible financial governance means has changed. Perhaps a generation ago, governance issues might have been reduced to a tick box exercise and a distraction from the serious business of making money. No more. Now it's at the heart of business strategy, and that's not because people have had some kind of moral or ethical awakening. It's because of the pressures of an ever more complicated and chaotic world, which demands that leaders pay ever closer attention to outside forces which threaten not just their bottom line, but their existence. We see that responsible governance means directors and finance experts must serve as the guardians of economic stability and sustainable growth. They must defend the reputation of their business by promoting transparency, accountability and integrity. They must embrace the long term over the short term, building resilience and trust. And they must deliver on their organisation's strategic objectives, as well as meeting regulatory, statutory and compliance requirements. Modern businesses operate in an increasingly complex environment where the interplay of financial, environmental and social factors requires a new kind of leadership. In all these areas, the professional accountant is the business leader's best friend. In our increasingly sophisticated organisations, the only people who command a 360-degree view of operations, across functions, departments, sites and even territories are the finance experts, the professional accountants. Professional accountants play their part in gathering the essential information needed to understand an organisation's risks, and by presenting that information clearly and consistently to decision makers in a common language. Their professional training and code of ethics means their understanding of risk goes far beyond financial reporting. It also creates and maintains appropriate governance frameworks and provides the foresight needed to navigate a volatile, turbulent and uncertain world. We shape our strategies so they are truly sustainable, to withstand and respond in a world that throws up new risks and challenges all the time, including climate crisis, geopolitical uncertainty and conflict, global supply chain disruption, rising and dangerous inequality between communities, countries and even continents, and the impact of technology, especially in the area of AI, automation and the use of data. ACCA has long advocated for sustainable business models and integrated reporting that considers impacts on society and the environment alongside financial results. Professional accountants also crucially serve as the curators, the defenders and the interpreters of data, increasingly vital at a time when the volume of information available to us expands exponentially. ACCA's research summarises the skills that businesses need to function effectively in this evolving world where sustainability is key. These include innovation, especially in emerging technologies such as AI and data analytics, and vision, with people from a wide variety of backgrounds, expertise and perspectives who recognise that governance is not just a regulatory obligation, but a strategic necessity, driving the sustainable growth demanded by investors and creating long-term value. In these ways, we can adopt healthier, more realistic and responsive attitudes to governance and risk. And that is how we build the vital trust with the public and policymakers, investors and regulators, which is essential as we seek to create new, sustainable economic models which can survive and thrive through to the middle of this century and beyond. Finally, I will end on this pledge that ACCA is committed to promoting good financial governance and excellence in the accounting profession as the global professional accountancy body with more than 750,000 members and future members in 180 countries. Our partners in India, professional bodies, regulators, trade associations, businesses and professionals prioritise financial governance. They know it is essential to guarantee transparency, accountability and long-term economic resilience. ACCA will continue to share our professional insights and global best practices in this critical arena. Together, we can drive financial integrity and trust ensuring a more robust and sustainable financial ecosystem that protects and promotes the sustainable businesses we need now more than ever before. Thank you all very much, and I hope you have a great conference.
Now we'll invite Mr. Himanish Chaudhary for his inaugural remarks. Himanish.
Thank you, everyone, for being here, and a warm welcome to all of you. Thank you, Venkat, Mr. Narayan, Mr. Nanda, Mark, and Helen, who spoke just now, for your presence and for your comments. It's a hard act to follow when you have your ex-leader going up front. I was I'd written down my notes, and then I kept on knocking off what the points that everybody made. I really have nothing left, so I'll probably say what I just want to. So for me, being an accountant, but not being a statutory auditor, and mostly on the, on the governance side of things and on the business side of things, I think there is one part that has never changed since the beginning of time, and that is trust is at the core of any business model that has ever existed. And the technological advancements, the ups and downs of the economies, the political upheavals notwithstanding, I think the one thing that has kept us going is trust. And for me, financial governance is the one thing that powers that trust. And it's just not about reporting or keeping with the regulations and all of that. That to me is a given. It's about how you understand the numbers and the reality it projects, and how you are transparent with it to all the stakeholders, starting with the customer, the regulator, the investor, the public at large, the government, and so on and so forth. So how are you using financial governance to really power that ecosystem and bring about the transparency and the decision-making might that is required in today's day and age? When we look at today, as opposed to when I was an article and, auditing companies, and when I started my career, the world has become very distributed. It is hugely distributed. Actually, if you see in a transaction, the number of hops have increased almost, multifold, right? Just the gap between the customer and its fulfillment has so many layers to it, and yet it is all connected. There are technologies that intermediate or disintermediate. There are agencies that disintermediate. There are third parties that disintermediate this entire supply chain. And yet, financial governance has to be at the core of it. We need to have clarity of who does what, whether they're doing it in the right way or not, and whether there is absolute interlock in terms of the way each one is delivering to the other. So for me, financial governance is about today, risk management. It's about ESG, but it is also about decision management. And I can tell you the enterprise that actually, becomes the market leader has financial governance at the core of its decision management. So it's much more than that. And I just come to, a buzzword that's been there for a while, and I've been working a little bit on it, and that's called FinOps. And we have this new thing which has come out in FinOps. Because if you see in the enterprise, the spends are shifting. Technology spends are actually much bigger. The capital expenditure is no longer about building units, but about or expanding physical infrastructure. It's about what is the big technology modernization I will do or the enterprise will do. So how do you measure ROI? How do you measure impact to the customer? And therefore, financial governance sits at the center of it. Is my spends worth the ROI? Earlier, it was fairly simple. Now it's become complex. Financial governance needs that ability to understand business and translate that into relevant numbers in the right form and drive that right substantive decision making. So for me, financial governance is all pervasive and it powers trust, which in turn powers sustainable business ecosystems and enterprises. I'll end probably with a small anecdote. And when I was, I'm actually privileged and a bit overwhelmed because I see in the audience several of my seniors. I see on the dais my seniors and people who I have learned from. So yeah, it's a privilege personally for me. So I'll end with an anecdote. I was just a very young chartered accountant and I had made it as a management trainee to a global bank, and I was pretty much out of my wits because all my batchmates were from the IIMs and whatnot, and it had a very strict selection criteria, and I was probably the only chartered accountant that slipped through those selection criteria and made it. And one day I went up, and there was a practice of assigning a mentor. And my mentor happened to be a chartered accountant who went on to become a very long-serving CEO of a bank, and now he has retired. And I went up to him and I said that, I don't think I'm cut out for this. And he asked me why, and I said, I know ledgers and I know debit and credit, and here I am being put through a rotation program, and I am doing credit or customer service and stuff like that. And then he said, come on with me. And he took me to the floor, which was the power floor, where all the senior management was there. And it was a Saturday afternoon. We used to work Saturdays then. And the lights were shut. And he took me up there and he pointed to each of the room and said, this guy, he's a CRO, he's a chartered accountant. This guy, he's the business head and he's a chartered accountant. And it was a moment of pride, something that I'll never forget. So, a big shout out to the community, big shout out to the profession. And I personally feel that trust and governance are the two things that are the only ingredients for sustainable, profitable business enterprises and business ecosystems. Nothing can undermine it ever. So with that, thank you everyone, and thank you esteemed speakers for giving me the opportunity. Have a great day. Bye-bye.
Many thanks, Himanish. May I now invite our guest of honor for today's session, President ICI, C.A. Charanjot Singh Nandaji.
A very good morning, ladies and gentlemen. Shri Anant Narayan, the chief guest of today's conference, Mr. Venkataraman, Mr. Mark, Himanshji, Shobhit Sinhaji, I have with me the chairman of the West India Regional Council, Ketan Sayasab, and all luminaries who have come here to go home more enlightened. Ladies and gentlemen, there could have been no apt topic than today. Financial governance building trust. I take you to my institute, the Institute of Chartered Accountants of India, which was set up an Act of Parliament way back on 1st July 1949, when the most important document of the democracy, the Constitution, was not adopted. The pertinent question that arises is what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India when its own democratic setup was not in place? The answer is very candid, very simple, very forthcoming. They were looking for a disciplined band of soldiers who could steer the country to perpetual progress. And that perpetual progress could never have been possible without financial governance and particularly trust. And today, as the largest accounting body in this world with over more like 485,000 chartered accountants and 10 lakh students, we are termed as the financial soldiers of this great country. I put across certain things which will ultimately equate the concept of financial governance and trust. I took over as the president of the Institute of Chartered Accountants of India on 12th February 2025. How our and CI's ideas gel. I want to put across that the theme of this year is Vishwasniya, which means trust. In professional avenues, if you do not have proper governance coupled with disciplined enforcement, nothing can happen. At the institute level, we have so many issues that start saying first with UDIN. We have a unique document identification number. There have been so many chances where people have used CS certificates for frauds. Now, if any of the 485,000 chartered accountants signs a certificate, it is put in the UDIN portal. And any person who uses that can go and look at that. Mr. Anand Narayan is here. Sir, last year, I was the chairman of the Digital Accounting and Assurance Board. The SEBI chairman gave a call to me. And I was taken aback. She said, Mr. Nanda, you are doing auditing. I want to collaborate with you on digital assurance. What a great idea she had, and we did a lot of work, and we have coined a study group, and we have created a document on digital assurance. Whatever items appear in balance sheet or profit loss account, except employee benefit and depreciation, everything can be verified from a third party. Again, a big example of corporate governance. UDIN, I told you, going ahead, we have FRRB, Financial Reporting and Review Board. We take stray cases, published cases of published financial statements and see if it is lacking anywhere, without any prejudice, without any thought process, simply by a program that is picked up, and we have study groups, we study and see these are the areas where financial reporting has to be improved, because improved financial reporting will ultimately entail financial governance. There is a couplet which says, रूहों में भी दाग आ जाते हैं, रूहों में भी दाग आ जाते हैं, जब दिलों में दिमाग आ जाते हैं. You have to very consciously put across a system wherein you create an ecosystem where growth is propelled by governance. I go ahead. We have a quality review board which is set up by the government of India, but we see that all auditors who do audit of listed entities are taken care of. Any small issue, any small transparency, governance issue is immediately taken to call, and we go for a proper review how things can be taken to the right perspective. We have a PRB, peer review board. Among chartered accountants who are in practice, one chartered accountant does the peer review of other chartered accountants, because we understand that all of them operate in a singular environment. A third person coming and doing a review may entail certain such questions which not be feasible. But in this case, a practicing chartered accountant does the peer review of the other chartered accountants, draws out governance issues, draws out issues where things are not put in the right perspective, or there can be a dual feeling. I remember that I was a part of the SCODA's committee of SEBI, SCODA, Committee on Disclosures and Accounting Standards. At that time, Mr. Damodaran Varda, he was the president of, chairman of SEBI. This is way back in 2011, 12, 13. Whenever he used to meet me, the first question he asked me, when are you bringing IFRS to India? IFRS, and now its carved version, Ind AS is in India. Again, everything on disclosure and evaluations. The financial documents which you give, which you certify, which you endorse, the inference drawn all across the globe has to be similar. That is the purpose of bringing a singular system This again calls for a greater degree of financial governance, because the document on the basis of which you take informed decisions puts things in the right perspective. Going ahead, we have ethical standard board. Mr. Mark spoke a lot about ethics. Yes, ethical standard board, which is one of the very prominent boards of ICI, and it go back to 1964, when one of our president, Mr. Cooper, wrote, he said, when you are beset with an ethical problem and you have a legal solution, don't bank upon the legal solution. Sit back, relax, and refer to your conscience. Ethic is something that is not driven by law, which is not driven by logic, it is driven by conscience, by the ideas which you carry. Again, a great impediment of trust. Ladies and gentlemen, if we go ahead, we have disciplinary committees to ensure that financial reporting is at the highest level. We have 4 disciplinary committees, of which 2 I chair, I am the presiding officer, and 2 my vice president chair is the presiding officer. The basic purpose is to create an environment whereby people move ahead. And moving a step ahead, we have used technology for financial governance. We have a committee, AI in ICI, Artificial Intelligence, in Institute of Chartered Accountants of India. In past 6 months, we have trained 12,000 chartered accountants. And now I want to tell here the international perspective. We are leaders internationally in technology, artificial intelligence, blockchains, Internet of Things, data analytics. We are now the back office of the entire world, which is a great testimony of the trust which is reposed on us. All across, we are termed as factory of accountants. I want to tell you that we pay money for using IFRS. Now people are, I want to tell you that 2 years back we came out with 23 forensic accounting and investigation standards. First in the world. First in the world. The entire world now is after us to pay license fees and take those standards for their professional use. India now has emerged a superpower in financial sector, in technology sector worldwide. There were times, I remember when I joined the council way back in 2004, I could feel that we don't have that resonance which should be there, but now we are overbound. I am reminded of a couplet again. It says, "Dete na the jo jawab, unke salam aane lage. Dete na the jo jawab, unke salam aane lage. Waqt badla, to mere neem ke ped par aam aane lage." My dear friends, I have long things to say, but I will just go ahead very shortly to tell you what we have done to strengthen the financial governance proposition and to ensure that the trust which we have, that percolates to the level of people who need to use that trust for creating value. Going ahead, I will just take a few ideas. We were involved a lot into the review of Companies Act 2013. The Institute has given a concept paper on that, MCA 21V3, which is the Digital Corporate Compliance Portal. We did the testing for the entire portal to ensure that everything is on board, and by God's grace, everything is on board today. Moving ahead, review of the Income Tax Act. I want to tell you the way Institute works. I told you forensic standards, we had 160 people working day and night on pro bono basis to create those standards. CBDT asked us to give 5 members for the review of the Income Tax Bill 2025. We made 5 members, and along with that, we created a battery of 40 chartered accountants. People as senior as ITAT members, as senior as the Vice President and President of ITAT, so that we could bring out the basic philosophy of ICI to the government, so that the Income Tax Bill can be taken care of. And we were the first which were called by the Parliamentary Select Committee to make a presentation, which we make last Friday. Chartered Accountant Bill calls for 3 very important things. Number 1, there are 536 sessions as of now. As Institute, we want to propose that at least 90 sessions be cut down so that it becomes concise for public at large. Second important thing, there are so many jargons. We want to simplify the language. And the third and the last thing, maximum litigation occurs because of interpretation issues. As the Institute, We want to advise to the select committee and then to the parliament how we could bring explanations so that the initial stage things should be put into the right perspective and no unnecessary litigation be created. GST reforms, you are aware that we did a lot of work in GST and we're doing it even today. Wherever an issue arises, the Institute of Chartered Accountants is there to not only help the clients, but the government as well as the council as well in resolving the issues. Micro, small and medium enterprises. We do a MSME Yatra every year. A bus goes, we call people, get them registered for MSME. We have a MSME dedicated helpline where anybody from anywhere could call and have his queries. Empowering chartered accountants by having certification courses for servicing MSMEs, again, is a great thing. Very briefly, I'm telling you so that you're able to understand the entire landscape on which we operate. Going ahead, accrual-based financial statements for Indian Railways. Indian Railways, the world's fourth largest network after the United States, Russia and China. We have done the conversion from single into double entry. Now they operate on accrual basis. They have their balance sheet, they have their all assets done courtesy Accounting Research Foundation, which is a part of the Institute of Chartered Accountants of India. Sixth, supporting local self-government accounting. We are deemed as partners in nation building. So ladies and gentlemen, we have started training graduates so that they can take into the accounts of local bodies, panchayats, and work there. So that has become a great hit. We have been holding exams. Again, we don't charge anything. It is only for the purpose of serving the nation. And we are getting good governance because governance is totally prevalent when it goes to levels, not only the top level, but at the lower level where immediate information starts coming in. Financial and tax literacy. We have a FTL board. You all know that only 27% of the population in India is financially literate. We have a committee on financial markets and investor protection. We do a lot of programs there. But financial and tax literacy in vernacular languages we do. Hindi, Punjabi, Bengali, Marathi, so many 10, 12 languages we do so that people understand what is financial and tax literacy and how they use for their financial disciplines. We have a sustainability reporting and ethical practices board, SRBS. We do a lot of work. We have set up our own sustainability standards and we were the world chair for sustainability reporting. We also have ESG initiatives. We do a lot of work not only on financial reporting but non-financial reporting. So going ahead, I want to tell you that if we want India to be a superpower, the most important thing and the most apt thing which has been the today's theme, financial governance and trust building. If it comes to MSME level, if it comes to regulator level, you will see that there will be upheaval into the thought process of creating India a superpower. I'm thankful to all of you. I was thinking in my way, I was in Jaipur, I had examination committee. I have specifically come for this, I again go back to Jaipur. In the way I was thinking, I was never aware that this road has been constructed. I was thinking, Fort, Nariman Point. And on a Tuesday morning, 10 o'clock, people will come. But I'm so happy and glad to see the level some people are standing also. Professionals. In fact, you are the people who will drive this. You are the people who would create awareness in financial governance. You are the people who would ultimately signify and attest whether trust is on the right path or not. As concluding remarks, I salute you all. And the last couplet from me, कि मंजिल मिल ही जाएगी थोड़ा भटककर ही सही, मंजिल मिल ही जाएगी थोड़ा भटककर ही सही, गुमराह तो वो हैं जो घरों से निकले ही नहीं. People who are here are visionaries. If that vision percolates to lower levels, we all shall be able to usher an era where financial governance and trust shall be the buzzword moving in all circles. Thanks, CA, for calling me. Thank you, Shobiji. I'm really glad to be amongst you all. Thank you. Thank you so much.
Thank you, sir, for such a great remarks. May I now invite our chief guest for delivering keynote address, Mr. Anant Narayanji.
Mr. Nanda is definitely a tough act to follow. and I don't have a single couplet up my sleeve. So, first of all, I want to thank CII and my compliments to all the dignitaries on the dais, Venkat, Mr. Nanda, Mr. Billington, Himanish, Shobit, of course, and all the dignitaries here. Thank you for the opportunity. I'm going to start with a couple of apologies, which is not usual of a regulator, but I'm going to do it anyway. First, I had no idea that Venkat is going to cut down on the humor because I'm on the stage. I wish he had told me that earlier, and I would have asked him to go ahead with whatever humor he had. But it was still a fantastic speech, Venkat, opening speech. Thank you so much. I have a second apology, which is that, in fact, I spoke to Shobhit and Venkat yesterday to try and get a sense of what this audience is all about, what do you expect from me as a regulator. And I realized very rapidly that I'm actually the wrong person to speak to you. The person who should have been here is actually my fellow whole-time member, Mr. Ashwini Bhatia, who would have had lots of things to tell you about related party transactions, about accounting frauds, and about all the cases that he has seen and all the pieces of advice that he has for you. In fact, given that corporate finance department in SEBI does not come under me, it comes under Mr. Bhatia, I was actually wondering what I'm going to tell you in what I'm going to speak to you about. Then I remembered something which my first employer, Citibank, taught me many, many years ago. So we had a media training in Citibank where we were given one sharp piece of advice. The anchor will ask you whatever they want to ask you. You ignore the question and you answer what you want to answer. So I'm going to follow that advice here. I'm going to ignore the topic and tell you instead what SEBI is thinking about, and we can have a chat about that. So the areas I thought I would cover is, first of all, a very quick overview of macro, something that regulators generally try to avoid, but I'll still talk about it. Second, the medium-term ask or expectation from the industry, which you represent so well. Third, how we see our role in facilitating you to do what you have to do. Fourth, I thought I'd pick up an example which is completely out of syllabus for this audience of the growth in the AIF industry, and I'll tell you why I think it's relevant. And finally, to keep some semblance of sticking to the topic, I'll talk about trust and governance. So let's start with the macros. Excellent comments which have come from all the speakers. I think it's fair to say that over the medium term, the economy is going to change, geopolitics and trade is going to change, and the nature of capital markets is going to change. Throughout our careers, I'm sure we've heard this word change bandied about a lot. But in the wake of things like artificial intelligence, quantum computing, fusion energy, robotics, and a whole host of other things, I think the pace of change and possible change in the future has just gotten out of hand. I think it's fair to say that over the next 5, 10, 15, 20 years, the nature of the economy is going to change beyond recognition for our generations. A lot of goods and services which are produced by people today will possibly be available without too much of human intervention. Imagine an economy when that becomes a reality. Imagine capital markets when that becomes a reality. I think one takeaway for all of us in India, and I know this is an international, quasi-international audience, but nevertheless, one takeaway for us in India is we can either be spectators to this change and try and react to it, or we can help define the change and actually set the contours for the change. That brings me to my second point about what is it that we need from you, the industry. I think we'll all agree that we have some fantastic strengths at our disposal. We have a population which has a fire in the belly. We have a population that's extremely skilled, hardworking, diligent. We have a population that is capable of taking risks. All ingredients which are great to define the future. We will also agree that there is zero scope for complacency. There are plenty of challenges. Look at the haze around outside the window to start with when it comes to climate and what that means to us. Demographic dividend can also become a demographic challenge. But the reality is, what we need industry to do is to actually go beyond incrementalism to actually taking risks to define the future. The next smartphone, telecom, AI, machine learning, quantum computing, fusion energy revolution has to come from us. We can't be the back office of the world forever. It's a great job, don't get me wrong. But at some stage, we've also got to start becoming frontline, much the way Korea or Taiwan has. And we are capable of it, but we simply have to recognize our potential and put money into R&D and into defining the future. So my request to you is, do think about how do we go about looking beyond our noses into 5 years, 10 years, 15 years from now, and how do you channel all this immense capability that you have to define future at a global scale. Now, of course, that requires capital. Of course, that requires resources, which is where the role of SEBI and other stakeholders comes in. While you know us as regulators and people who chase you for enforcement, etc., our job across investor protection, market development, and market regulation is effectively to ensure sustained capital formation. The way we see our role, we've got to make sure that risk-aware and risk-capable money is available for you to tap so that you can invest in defining the future. Now, we've talked about trust and we've talked about the need to take risks. And you heard what our new chairperson mentioned on Friday about optimal regulation. I can tell you from my perspective how I see this. As regulators, we naturally need to guard against type 1 errors, which are the errors of fraud. So when you have an accounting fraud, when you have money being siphoned out of a company, when you have a valuation fraud, when you have a manipulation in the market, when you have a technology incident which happens, these are type 1 errors which can absolutely erode the trust in the ecosystem. And once that trust is eroded, capital formation can be set back by several years. As regulators, our nightmares are made up of type 1 errors. But as Mr. Billington mentioned, there is also a type 2 error that we should be equally petrified of, which is in our zeal to stop type 1 errors, if we come with a regulatory ecosystem and a framework that is so onerous that good people simply can't do capital formation, then we are coming in the way of good business, we are coming in the way of capital formation, and we are not doing our job. That's a type 2 error. We need a fine balance where we need to minimize both type 1 errors and type 2 errors. Now, those of you who are students of statistics will know that is impossible. You cannot minimize type 1 and type 2 errors together. But that's where the simile ends. This is not statistics. This is regulations. By actually becoming trusted partners to each other, it is absolutely possible to come up with a regulatory framework that works constantly on minimizing both type 1 and type 2 errors together. This is where CFOs, this is where ICAI, this is where accountants and regulators and all other stakeholders have to work together. And I'll talk a little bit more about type 1 and type 2 errors when I come to my little bit about alternate investment funds or AIFs. Why am I talking about AIFs? Remember, our challenge is to protect investors, at the same time to make sure money is available for those of you who need to create capital or who need to create productive assets. We have to balance the two. And particularly if you're looking to redefine the future, you are going to take on enormous amount of risks. A lot of the ventures might not work out, which means we need absolutely risk-capable people to come in and provide that capital. One way forward is actually the AIF industry, on which I think there's a lot of dependency and a lot of hopes. By the way, this industry has grown very silently, and I'm not sure if people realize how big it's already become in India. Typically, private equity has come in through the FDI route, but the AIF domestic industry is growing quite rapidly. The total commitments into AIFs in India have crossed 13 lakh crores as of December 2024. It grew by 2.2 lakh crores through the course of 2024 in terms of commitments. That's a number comparable to the money going into mutual funds in the equity side. Of the same, it's still much less, but it's still of the same order of magnitude. The total investments done by AIFs into actual assets has crossed 5 lakh crores. It's close to 5.2 lakh crores. And the numbers are rising. The CAGR is 30-35% over the last 5 years. Now, there is still a lot of work that to be done in this particular area. What I'm hoping that will sort of catch the fancy of all of us is a regime called the accredited investor regime. This is a personal view. I'm only one voting member of the board, which has multiple members. Personally, I believe that we need to popularize this accredited investor regime. Many of you would fit in that bracket. If you are risk aware, if you are financially capable, if you can do your own due diligence, if you don't need investor protection from SEBI to the extent a small investor in mutual funds needs, you can become an accredited investor. You essentially sign in blood saying, I know what I'm doing, you SEBI get off my back, I will manage my portfolio the way I have to. That takes a weight off our shoulders. And then we can allow for platforms where such risk-aware money, which is coming in with its eyes open and knows what it's doing, can be available to fund the ventures which are going to define the future. That's the essence of the AIF regime, but I'm saying we don't have an accredited investor regime as yet. I think it can be popularized, and then the extension can be made well beyond the AIF industry as well. And I'm personally hoping that we see a lot of growth in this. Now, why did I pick up the AIF industry besides the fact that it can fund the future? This is a classical example of the need to balance type 1 and type 2 errors. In the AIF industry, 2 years ago, when I joined SEBI 2.5 years ago, SEBI was extremely perturbed because since AIFs are a light touch regulatory framework, we saw several cases of AIFs being structured to circumvent existing regulations. Some of us are jugadus. So we saw egregious cases of AIFs being structured to circumvent NPA recognition, to circumvent FEMA NDI regulations, to circumvent SARFAESI and IBBC regulations, and a whole host of SEBI regulations as well. What perturbed us even further was that we did not learn about this from industry. We learned about this by either accident or through our inspections and supervision. Essentially, we were like the Bollywood police people coming in at the climax when after all the action has happened. And then when we went back to our friends in the industry and said, my God, do you know that these things are happening? Then some of them told us, of course this happens. And by the way, even more things happen. Why didn't you tell us about it? And as a result, there was a lot of distrust built up in the system 2 years ago. Now I'm happy to report to you that things have changed since then. The whole of last year, the industry associations and SEBI have worked extremely closely together, and I have to compliment associations such as the IVCA for having been a transformational force in this regard. There is a lot more of co-creation that happens between industry and regulators, and we have, to our satisfaction, resolved this issue of AIFs being used to circumvent regulations. We've put in place a regulatory framework with the concurrence of industry, which we think plugs this particular loophole, which also minimizes type 1 and type 2 errors, which means that the resultant regulation framework hopefully is not onerous for the good people. Now we are looking at what is it that we can do to further capital formation even more. My ask to you using this example is this. Governance is not just about ensuring that your nose is clean. If you see something, say something. This is not snitching. This is preserving the trust in the ecosystem. And that comes to my last point about trust and governance. The people on the ground know the best. Ask me, I've been a trader. So when I was holding corporate bonds in my book, or when I was holding illiquid assets in my book, I knew where it would sell. And I knew what it would sell at. If I had to sell in 1 day, in 1 week, in 1 month, 3 months, I knew where it would go. Or I had the best sense of where it would sell. If I know it's going to sell at 35 paisa to the rupee, but the valuation is at 95 paisa to the rupee, and if I fell back on, oh my God, the valuation agency is giving me this number, I'm only following them, that is utter rubbish. So the front line, the responsibility starts and ends with the front line. Second line, third line of defense comes later. And it is so crucial, particularly as we embark on taking on risk, that we preserve this trust by being as truthful as possible. So as we embark on this journey of capital formation to define the future, the need for trust, not as a moral imperative alone, but purely as a hard-nosed commercial imperative, cannot be overemphasized. And here you have a collective responsibility which stops beyond saying the nice things in conferences. It becomes, please be trusted advisors, explain, we are fools, we are sitting in our ivory towers in SEBI Bhavan. Explain to us what is happening, tell us about the type 1 errors, and then help co-create a regulatory ecosystem which helps minimize both type 1 and type 2 errors. If you do that, and then you come to us and say, my God, you've got so many of these redundant regulations which make no sense whatsoever, we will be trusting enough to listen to you because we know we can trust you. Today, when you come and tell us there is an onerous regulation, we start wondering what is in your mind. We have to be trusted advisors to each other. And as the new chairperson said, we want to co-create this with you. So my request to CII, my request to ICAI is, talk to us. We find it impossible to talk to hundreds of individuals, but you as an association can put together your views, come to us, have honest conversations, and I can promise you, you take one step forward, we will take 3 in co-creating something that is good for capital formation across the industry. I'm going to stop there. All I want to leave you with is, I think the future beckons. For us particularly, we are in a fantastic spot if we can recognize our strengths and our potential. There are plenty of challenges, no room for complacency. Capital formation, like all the speakers mentioned, is going to be of paramount importance. We get it. We are happy to co-create a regulatory framework that sustains capital formation with minimal type 1 and type 2 errors so that trust is maintained and ease of doing business is maintained. We want you to work with us and we will work with you to ensure this co-creation happens. Thank you very much and all the best for today.
Well, this brings us to the close of the inaugural session, and I must thank each one of the panelists. I diligently made my notes. I think one of the reasons they normally put me on stage is so that I listen to others as well. So, and I think after the way in which Mr. Anantnarayanan has summarized everything that we have said at the end of this, it's very hard for me to actually summarize his summary. But I think that the messages are very clear, and many of us sitting in this room have to take it in the spirit in which it is given, that you've got to lead from the front. It's not just a question of being the front line of defense, but look at yourself as the front line. We should move away from incrementalism at this point of time in this country's progress. Trust is key to what we do, and all the other things that some of us as speakers spoke about as well. But to bring an old cliche, change is a constant. We can expect that there is going to be change in the foreseeable future. So I think this is a very, very good segue into our next session that is going to come up. I presume, Shobit, we will have a quick break, and hopefully at that point in time you will add some more chairs for so many people who have come to join us. And in a sense, I'm very apologetic that some of you are at the door, but thank you for giving us a standing ovation. Thank you very much.